Sponsored by Chartered Financial Strategies. You are now watching Tax Bites.
All right, this is the section we're going to talk about the CARES Act, and I guess we're going to talk about a couple different parts, maybe three parts. The first part is some non-tax provisions, which relates to like unemployment insurance, some payroll protection loans, and some distressed business loans. The first one is the unemployment insurance. It now captures in self-employed people. Normally, unemployment insurance does not, but this one will. It also extends coverage to 13 weeks, or expands it by 13 weeks, if I understand correctly, and adds a $600 on top of state benefits, is how I'm understanding it. A little bit confusing, but Department of Labor does say that you'll receive an additional $600 in federal benefits per week for weeks of unemployment ending on or before July 30th, 31st of 2020. So this is where you'll probably work through your state unemployment office and have to get the benefits through them, and looking to them for what documentation will be needed. For the self-employed, since it's unusual, my guess is a 2019 tax return. Maybe there's going to be some bank statements you're going to show for what income you were getting, January, February, and some downturn in March. That's going to be a little bit creative, so you may end up having that kind of issues to work with your tax advisor on, or at least consult your unemployment office for that. But that would be for self-employed. Obviously individuals will support that either through some layoff or whatever, letters or whatever from their employer to help them get this information. If they're getting, I'm not sure if they get the paid leave, if they get some reduced paid leave, if that will apply, that you'll have to consult your unemployment office to see. But my guess is yes, that's the way I'm reading it. Again, I'm not an expert on that, so this is a little bit outside my realm. The next major thing is the payroll protection loan program. Again, this is going through the Small Business Administration. This is changing probably daily, if not more. You can have basically businesses with less than five. This is a Small Business Administration website, and it's a top line thing, but basically employees with less than 500 can apply, including sole proprietorships, independent contractors, and self-employed people. So I think there's a way to get some money there for your own personal, self-employment income. And I think this is getting a little creative too. So when you look at the employees who are getting a W-2, that's pretty easy. When you look at the owner, is the owner needing to have something to support? Maybe they have a W-2, maybe they have other income they're getting from, like the K-1 income that's being reported, distributions, K-1 income, that kind of stuff. That may be coming through an S corp. They have a W-2 and a K-1. What if you're a partner and you don't have a K-1? You're just getting guaranteed payments. So there's going to be some creative efforts to work with the tax advisor to show to a small business administrator there's more payroll than payroll, and that kind of a thing. So that would be some ways your tax advisor could step in and help. The conditions of the loan, again, this is from the SBA website. So 75% of the funds must be used for payroll. I think 25% can go to other things such as interest on mortgages, rents, and utilities. And there's a level of forgiveness that we'll be having. It's a 2-year loan, interest of 1%, pretty much very low interest rate, and it has a level of forgiveness I think if you retain your employees. I have to go back and look. I thought I saw something here, but basically you don't have to start paying anything for 6 months. And of course, here it is. It says forgiveness will reduce if full-time headcount declines, so the level of forgiveness decreases if your headcount declines, or if wages and salaries decrease. So that's the gotcha. You're getting your money, and then if you think you're gonna have to cut back, this may not be as great a program as you think it's going to be. It's still at 1% to your note. That's not a bad thing. So it's watch the forgiveness level of it as your business progresses into the future, and what you may have to do business wise to deal with it. And that's that part there. That's probably it on that. Now the other portion that gets into distressed business loans, I don't think that's going through the Treasury Secretary. I don't see any guidance on that yet. So that's kind of a wait and see at this point in time. My guess is they're pushing the payroll loan program right now and focusing on that, and they may move middle of this month to something more, on the distressed loan program. So that's kind of part A of CARES Act at this point.